How to stop becoming emotional about trades? Well, the way I did it was I assumed responsibility for everything that I did, right? I live in a paradigm of personal responsibility, and I stopped blaming the market and other people for my losses and my missteps and anything that wasn't positive. I quickly stopped becoming a victim. I wasn't really that way anyway in my life because I had already owned and run a business by the time I had gotten to Wall Street that I had built and sold. And I had plenty of interactions with people and people who didn't pay and people that were pains in the asses and this and that. So, in order to become a very disciplined trader, I had to be able to control my emotions. And in doing so, I realized that the first way to do that was to control my behavior because behavior predicts where you end up. And for all the different ways that I invented to lose money early on, I realized like that was of my own doing, right? So the sooner you can get to the point where like if you're failing, it's because of you, not because of the market. Even when I put on trades now and they stall, right? And they don't work out and I have to use time stops even before I get stopped out for losses, I'm still putting the trades on. No one's holding a gun to my head. And that really helped me grow. It empowered me actually. It taught me that I was in control or certainly could become more and more in control. Because certainly when you're starting, you're like, I'm not in control of anything actually right now. So I also got a great comment from someone who said my skin was glowing. Can you see? I don't know. I'm getting older. I was thinking of getting a little tuck or a facelift. What do you think? Would this look good? Looks natural, right? Anyway, I'm being facetious. I've already had my facelift. No, I haven't had any face. I'm not going to ever do that. I do have a little, should I get rid of my wrinkles or this and that? I think that comes mostly from the women because it might be something that they're thinking about more than the guys, although the guys are terribly vain. But thank you for noticing my skin regimen. Anyway, back to the show. It is, clean living, right? My skin is a reflection of the inner beauty that I have in my soul. That's right. It's my risk management that keeps me glowing. It's probably water and diet, I guess, as much as anything. But anyway, the more you're willing to accept the responsibility, I think, of all your actions, the more empowered you're going to be. That leads to confidence. And you know what I have to say about confidence. So I was just like, okay, the best way to minimize, to stop making mistakes is to minimize actions. So that meant, minimize the amount of time that I would read research, especially once I figured out that it didn't help me make money, right? Minimize and at least monitor. First, you have to measure, right? Because what gets measured can be improved upon. So I had to measure everything up front. And that was easy for me because I had been doing that anyway. I was constantly building spreadsheets on everything from batting averages, from my favorite baseball players to the team's winning percentages. And I was kind of like a Bill James, kind of before Bill James. I watched weather, temperature, humidity levels, and marked the days so that I could see the seasonal tendencies. I did that in New York. I know that probably sounds stupid, but I was just interested in the data because I knew once I had the data, then I could make a model. So trading and modeling and all that came very natural to me. And it's kind of how I backtest. My trading strategy was to get all the data and then to isolate one item at a time, right? Because most of the stuff is like how you can use MACD to make 10 million like this 8-figure trader. Bullshit, you can. So I would say, okay, let me put it into the backtester and then evaluate it and see and test varying levels of it. Did that increase my expected value of a trade? Because to me, that was all that mattered. You could certainly, I've backtested stuff and I've geared portfolios to go from $1 million to 50 million inside of 10 years. The problem is you have to live with an 80% drawdown, in order to get that. So again, what can you emotionally, and the drawdown came at the end pretty much. So you were up to 50 and you walked away with 10. Still up basically $1 million a year, I guess. But that's a lot to have to live through. And you can put in parameters to step. There's a step function that says, okay, if you adjusted the values by one increment or decrement, right? Usually it's start here and then build it up. You can run the test over a portfolio of securities and do it, 10 different valuations to see if there's one that's optimal, right? Then what they actually do also is Monte Carlo the thing and vary the start date. Why would you want to do that? Well, because you have to. There's a lot of limitations to backtesting. One, they're not necessarily predictive. They don't actually change on a dime. But this all falls into place of like how I accepted responsibility for my behavior and stopped blaming other people. It's about ownership. This is me. This is my business. Everything that happens in it as a trader is a reflection on me, right? And I knew enough, and I had watched around the office of like guys who were like really bullish on certain names and they couldn't lose. And it was like infinity or zero kind of model. And I was like, man, that's kind of reckless because they just completely blinded by the hubris of what's going on. And the names, the tickers don't even matter anymore. But it was more like, man, if you can't get out of your own way, who's going to be there to protect the client capital? And this happened a lot too when people were already up in the name. They were like, this is going on forever. And there was no risk management. There were no protective stops. And in certain circumstances, the names would come back to, be below break even. And then the people would be resigned to like, I don't give a shit. It's still going to be great. In 10 years, we're all going to be talking about this. And I was like, how are people even trusting these people with money? How are the clients even trusting like these people? So I became So the point is like when I had a protective stop in those names and I got knocked out, they were all like, you're an idiot. You're going to be sucking my kneecaps in 10 years. And I was like, this isn't really competition in that regard. Like this is just trying to play superior defense, manage my equity. I don't really have it to lose. And I'm too young in the business to want to take on clients or find out, that I had a $20 stock that's now trading at 12. I don't have it in me to kind of overcome the types of complaints or objections clients might have over that type of a deal, even if they are or were investors at the time. So again, self-knowledge is really, really important. Managing the client expectations, that's a different ball of wax. You have to remember, inside the wirehouse, those people are marketing. Wirehouse like a Merrill Lynch type of a deal. They're consultative salespeople. They're trained with licenses that allow them to speak to the public, but there's not a lot of training in-house actually on how to run money. I think a lot of them fancy themselves as portfolio managers, and they very well may be constructing portfolios, but at the end of the day, it's largely asset allocation, and they get paid quite handsomely for asset allocation. But in terms of like asset allocation is risk reduction, it's not risk management, and herein is the problem. So if you work at a wirehouse, I'm not putting a stick in your eye, but I know what the training is, and most of it doesn't qualify, despite what the marketing people would call it, as portfolio management. It's more asset allocation, probably more so if they're picking the securities or if you're using a third-party manager. I didn't want to go that route, and I wanted to accept the responsibility of the P&L. So that's where I started using the backtester and the simulator. I was doing everything by hand in Lotus 1, 2, 3, and saying if I had made these decisions, like what would it look like? And it wasn't always pretty. So I just had to keep iterating when they created these trading engines that you could use to backtest at the portfolio level. I never cared about trading one idea at a time because who's gonna just have one thing in their portfolio, right? So, and then I was like, okay, well, if I put these trades on, some are going to make money, some are going to lose money. Then you learn about using time stops, right? What happens if momentum stalls? Because everyone needs diversification, whether you're an investor or a trader. So the number two thing after that is momentum in your favor. So what happens if you have the idea, which is probably right, but the momentum stalls? And so the stock that you bought at 20 bucks stays at 20 and kind of languishes there for a while. So I learned to employ time stops to say, okay, well, whatever I was thinking was off base or out of line with what everyone else was thinking, and the buying pressure didn't show up when I needed it to. So now I got to reallocate that cash, especially when I was starting out, because I didn't have a lot of money to go around. So if something stalled, I had to get out of it. That was just the way it worked. But that was all like when I kind of realized like I'm in control here. I can limit my losses, and that's a very, very empowering statement to say. And your protective stops are a very, very powerful tool to be using, because when I would get into some of those names, I wouldn't have the same size position on, but I didn't know, I didn't know a lot like what you might know now. I didn't know about stock picking. I didn't know. I had to kind of learn that all on the fly. So you could get caught up in what was going on in the office and what other people who were successful were doing. And so then that becomes a problem, because now it's like, okay, now my P&L is a reflection of somebody else's thinking. So I had to get out of that. And I did that very, very early on. That's why I'm not necessarily a big fan of all these alert systems. It's like, you got to eat your own cooking. To me, if you want to be successful, it's okay to read research, but at the end of the day, you have to trust your own instincts and know how much you're going to put on and at what place, and where do you know you're wrong. Technically, it's 1 penny below or 1 tick below where you got in from a financial standpoint, but obviously you have to give some room for the ebb and flow of the day-to-day, price action. And by just doing that, not using any indicators, I just became a pure, price action trader who systematized his rules, who employed time stops, who added to his winners, and then stopped really relying or caring what other people thought. Why was that? Well, because most of the folks, they were just parroting stuff that they heard, like the TV folks, the financial journalists. Like, they don't have a lot of original thought, to be frank, right? They get sent research reports and tips and this and that through email, and then they read it on screen with an authoritative voice as if they've come up with the stuff themselves. But it's basically all from their sources, right? What are they but for their sources in many ways, right? And then it creates a talking point, especially if it's a lightning rod. Then they get viewership or page views, or they get, shares and vanity metrics on Twitter. And I just don't need it. I don't need any of that. I don't need to participate in that. I don't want to call it a game because that's condescending, but the business is advertising, right? And so I don't want to participate in their advertising model. I'll do my own research and I'll make my own decisions. I don't need anyone else's thoughts, or opinions on things, because it's my risk management rules. I can't manage my risk based on what Warren Buffett thinks of a particular stock. I don't really care what he thinks about anything, to be frank. So same thing with commodities. I have great respect for a lot of the folks who trade commodities, but I trade my rules that are congruent with who I am as a person. And the more you can kind of steer your ship in that direction, so that you're autonomous and that you're self-reliant, and that you don't have to, you don't have to internalize other people's opinions or alerts, and that you accept the financial and the emotional responsibility of what you do. That, to me, is when you'll start cooking with gas, because that really empowers you. It sets you free. It liberates you from all the noise. And then you just get to operate as, a self-contained unit. I know what you're saying, Mike, you're such a big unit. Well, at least I got a glowing face. Have a great weekend. Watch these videos here, folks.